Our topic today is the fulfillment process, which is one of the supply chain core processes that we've discussed earlier. This process is enabled by the SD module in SAP. And of course, SD stands for sales and distribution. Now, as you can see, the fulfillment process consists of a number of sub-processes, some of which are listed here. And if you look at this list, you can see that a couple things are apparent. First of all, most of these sub-processes span several functional groups within an organization. And the second thing that you should notice is that the results of some of the transactions that occur are going to have an impact on the organization's finances. Now we can look at a high-level overview of the fulfillment process for Global Bike. And when we do, you can see that we have a number of functional groups involved. Clearly, the fulfillment process is going to include the customer because it's the customer that is purchasing the material or service from us. It's also going to include our functional groups in marketing, operations, and finance. And we're also going to include some of the ERP system functions as well. In this case, the master data that is going to be captured as part of the process. Now, the process starts with a trigger. And the trigger can be either external from the customer, they recognize that they're low on inventory and need to replenish it, or it can come from our marketing group. Maybe they've gone out and contacted a customer and convinced them to try a product or service that we have to offer. Now, when it's triggered by the customer, the first question that you have to ask is whether or not the customer has purchased this material before, and if so, from a particular vendor. If the answer is yes, then the customer can proceed directly to creating a purchase order, which then flows into our sales order processing process. But if the customer has not bought from us before, they may instead ask for us to provide them a quotation. They may have additional questions regarding the quality and delivery and price of the product or service that they're purchasing from us. So there'll be a number of pre-sales activities that could take place prior to the beginning of the sales order process. Now, once the sales order process kicks off, a very important piece is going to be looking at the customer's credit to determine whether or not they have enough credit in place to purchase the good or service from us. And if they do, we then proceed to our part of the fulfillment process, which is locating the product, in this case, picking it from inventory, packing it into a suitable format, and then shipping it to the customer, who then receives it from us. And upon receipt, then creates a document that enables us to invoice the customer. Our invoice flows into the customer's accounts payable process, which, as they process the invoice, flows back to our accounts receivable process. And it is only after we have recorded the final payment for the process, for the product rather, that the process ends. You can see this document in greater detail. It's posted separately on Blackboard. Now, all of the discussions that we have for the various processes in SAP are going to be organized in a similar manner. We're going to start off by talking about the organizational data or the filing system that we're going to use to capture the data that's part of the transactions. We're going to look next at the master data that is used during the transactions. And then finally, we'll look at the detailed processes to see how the information flows through the system. So the first thing I want to talk about is the organizational data. And for the fulfillment process, I have broken the organizational data into really three groups of data. Now, keep in mind, what is the purpose of the organizational data? The purpose of the organizational data is to act as a filing system for the information that is created during the process, all of the different transactions. How are we going to capture what they've done? Well, we need to do it according to the organizational outline that we've established for the organization. And so you can see here that what I've done first of all is highlight organizational data that's needed to track business performance in general and sales and marketing performance in particular. So things like the sales organization, the distribution channel, the sales area, etc. Now there's a second group of organizational data that is used by the production people to manage inventories and determine when, for example, additional products need to be produced to replenish finished goods inventories and things of that nature. And then finally, there's a finance set of organizational data that's used for risk management, and that would be the credit control areas. Now, the easiest way to understand what the organizational data is and how it's used is to look at it in terms of what information we're trying to capture. So, for example, all SAP transactions are assigned, or take place rather, in a company code that is assigned to a client. So you will see this organizational structure for every single transaction, client and company code. But beyond that, for example, we might look, for example, at fulfillment and the sales organization and the distribution channel. So the sales organization is the group that is responsible for, as it says here, certain products or services. And so you might be looking at, the Global Bike sales organization that is assigned sales of particular products and services that Global Bike offers. Now, those products and services do not flow to the customers in the same way. They flow through various distribution channels. And you're familiar with a lot of distribution channels, I'm sure. Wholesale and retail come directly to mind, but you're also familiar, for example, with internet sales. That would be a distribution channel. Direct sales, things of that nature. So if we wanted to look at this organizational structure graphically, it would look like this. We have at the top, of course, the client and the company code. And in the case of Global Bike, we have two company codes, US and Germany. Each company code has its own sales organization, and Global Bike has elected to organize its sales organizations geographically. So we have an Eastern sales organization and a Western sales organization. Those sales organizations, in turn, have distribution channels for wholesale and internet, both for the US companies and for the German companies. Now, why would it be important for us to organize our sales data in this manner? Well, think about it. Marketing performance is going to be based, first of all, on what kind of revenues they can generate. So it would be nice to know whether we're selling more product on the eastern part of the US or the western part of the US, but also by distribution channel, because that might affect the way we market our product. In other words, if we know that in the case of Global Bike, for example, internet sales are taking up a larger and larger proportion of overall sales, then that might lead us to a different marketing strategy than if it was true that the wholesale channel was providing most of our revenues. So dividing up the information in this way allows us to better assess the performance of our marketing organization and better allocate things like advertising dollars and other resources to the marketing of our products and services. The other way that we look at the marketing area is through division and sales area. And this enables us to segment our products so that we are able to look at, for example, a particular product and how well that one is selling. In the case of Global Bike, we have two types of products. We have finished goods, which are the bicycles that we build, and we have trade goods. And what trade goods are is essentially products that we buy from other companies and then rebrand and sell through Global Bike. So that is a way for us to look at how we break up our uh, marketing groups as well. And then, of course, that leads to the creation of what's called a sales area. So a sales area is basically just a combination of the sales organization, for example, Global Bike West, distribution channel, for example, internet, and division, for example, trade goods like helmets and pumps and things of that nature. Now, the other parts of the organizational structure that are important to us have to do with the way we go about fulfilling the order. And here is where the other organizational elements that we've talked about before enter in. We have a plant. In this case, it's the plant from which we ship the products. And then, of course, the storage location, which typically will designate as a shipping point. So let's look, for example, at the Global Bike sales areas. And you can see here that just as before, we've got client company code, in this case, Eastern and Western U.S. sales organization, distribution channels, as you can see here, and then further, we've broken the distribution channels into bicycles and accessories, So now we have a sales area that enables us to further segment our marketing performance and helps us better allocate resources. Global Bike uses what's known as a centralized credit control area, and we'll talk about that in more detail in a minute. But the basic idea behind credit control is to manage the risk, because if you think about it, you have, during your production process, you have to acquire the raw materials, you have to pay the people in the production plant that are performing the labor to produce the final product. You also incur ongoing expenses for overhead, for utilities, and for consumables. And so you actually, by the time you've finished producing something, you've got a fair amount of investment in your working capital. And in addition, any credit that you extend to a customer also increases your working capital investment. So credit control is a way for you to manage your accounts receivable. It allows you to maintain accounts receivable at a reasonable level given your customer makeup and whether or not their business is growing. So if we put this all together, we can see that from a fulfillment standpoint, we have at the highest level the client. Then we have a centralized credit control area. Now we could have individual credit control areas for each of the company codes, and that would be okay as well. But Global Bike chooses to have a centralized credit control area. So then we have our company code, our sales organizations, East and West, our distribution channels, and then across our distribution channels, the various divisions. Now I should note that in the Global Bike client that we're using, the only company codes that are active are for the US and German companies. Canada, Great Britain, and Australia will be implemented in a future version, but it won't affect us, so there's no reason to get into that. Now, when I'm discussing the fulfillment process, I like to focus it on what I call typical process questions. What do we need to know, and where are we going to get the information? Well, first thing we need to know is what is being purchased. And for that, we're going to rely on the material master to provide that information. Who is buying it? Well, there we're going to turn to the customer master. What are the terms and conditions? For example, the cost, discounts, shipping data, etc. That's going to be part of the purchasing information record. That's something that typically will come either from the customer master data For example, things such as discounts and notes that might be applied to a particular customer, or from the material master, general data, vendor data, that kind of thing. And then finally, do they have sufficient credit, which is something that's going to be maintained for us by the credit management master record. So you can see we've got several types of master data that are required for this process to be executed. So let's talk first of all about the process master data. Here we have an example of a sales order that has been created to sell 5 bicycles to one of our customers. The information that's coming from the customer master data would be things, for example, the name and address of the customer, whatever type of payment terms that they have established, and where we are shipping the products from. In this case, we're shipping them from the Miami distribution center. The material master, on the other hand, keeps track of the SKU numbers, the actual part number, how the part is measured. In this case, we're talking about bicycles, so we measure them in terms of units, a description of the material, and the plant where it was going to be shipped from. And then finally, the sales conditions. In this case, we are selling them in US dollars. They're priced at $3,000 per bicycle. So for the 5 bicycles, the total invoice starts out at $15,000. And you can see that up here in the net value, $15,000. Now, the material master is something that you can look at in your particular Global Bike client. You can go to transaction code MM03, that's display material master record. And in the basic data tab, you should see something that looks pretty similar to this. Bicycle is, in this case, is the deluxe touring bike, the black one. It's in sales division BI for bicycles. Its basic unit of measure is each, and its weight is approximately, in this case, it's in grams, so it's a little bit over 8.5 kilograms. Now, you'll notice a number of tabs up here. These tabs are referred to as views, and the material master, for example, you're looking at the basic data, but the material master and all other master data comes in different views. These views are set up according to the functional area that the person works in. So, for example, somebody in accounting might be very interested in the financial characteristics of the material, what its cost was, what its price is, that sort of thing, but probably not too interested in where it's stored in the plant other than just knowing in general terms what the inventory is. On the other hand, somebody who is in operations is definitely going to need to know where it is stored because that's how they're going to pick it for shipping, but they may not be so interested in purchasing data such as who the vendor was that provided the raw material, let's say. So depending on your functional responsibility within the organization, you will have access to one or more of the various views of the material master. Now, for our class, you have access to all of the material views, so you can see what they look like. We also segment the material master according to sales specific information and location specific information. So you can see here the actual inventory quantities would be located in either finished goods or trade goods, which are goods we've purchased from another company for resale or branding, whereas the sales organizations, as you can see here, are US West and US East. Customer master data, as the name implies, contains all the information having to do with a particular customer. In this case, our customer is Philly Bikes. You can see that it's located on Westchester Pike in Philadelphia, and it has other data assigned to it as well, payment transactions, control data, etc. This information is maintained by marketing and enables us to essentially keep track of customers that are repeat customers or even new customers in the organization. Here you see where we have it segmented by sales area. So this is important, again, from a performance standpoint. And if you think back to one of the papers we discussed earlier having to do with Sara Lee and how they rationalized their customer database by eliminating customers that were unprofitable, this would be how they would go about doing it. They would analyze their customers by sales area and find out which ones were profitable and which ones were not. Like the material master data, the customer master data has, in this case, sales-specific information and company code-specific information, because each customer is going to be assigned an accounts receivable code, which is going to be used for payment processing. The condition master, SAP uses the term condition maintenance with respect to anything having to do with the terms and conditions that are used in processing any kind of a purchase order or fulfillment request. And normally the condition master, the pricing is going to flow into it directly from the material master. Sometimes the cash discount will flow from the customer master if you've negotiated a particular agreement that says you're such a good customer, you get a particular cash discount. On the other hand, the cash discount could be calculated on the basis of the total gross amount of the order. In other words, condition master data can come from a number of different material for different data. And as you can see here, it's either material specific or customer specific. It can also be filled in by the user. So in this case, whereas before the material master said the price of these units was $3,000 each, you could go in and change that and up the price to $3,200. Typically, if you have a new customer, you might want to give them a price advantage. So you might, instead of increasing the price, decrease it. But I'll leave that to the marketing folks to argue about whether that's what you would do. Once you have finished processing the sales order, in other words, you have created the final document that says we are selling this material to this customer at this price for this delivery, etc., you would create an output document. Now, the output document typically is going to be a confirmation of a sales order, but it could be something as simple as a quotation in response to a customer question, or it could be a final invoice. If this is a customer, for example, that has a blanket purchase order with you, and so every time you ship to them upon shipment, you create an invoice. Now, I've shown you the business process diagram earlier for the sales order process, and the slides from this point forward go into the sub-processes in additional detail. And it's important for you to take time to review these slides on your own and let me know if you have any questions about the sub-processes in particular. But there's one that I would like to go to right now that I want to talk about in more detail, and that has to do with the credit check process. So if you'll bear with me, we'll go to slide 37 and talk about the credit check in more detail. The credit check is, as I said before, is useful in that it's maintaining some kind of risk management over your accounts receivable. But it's more of an art than a science, because if you think about it, if you have a customer that's growing, then from time to time they will need to have an increase in their credit limit. And if you don't allow that to occur, then you run the risk of losing a potentially good customer. On the other hand, a customer whose accounts receivable are aging 30 days, 60 days, 90 days, 120 days, those are customers that may be having business difficulties, and they're the ones that are at most risk for defaulting on the money that they owe. So you have to have a process in place that allows you to determine whether or not to increase or decrease a customer's credit limit. Now, the overall credit management process kicks in once the sales order is created. But it's not only at that point that we perform the credit check, because between the time we create the sales order and the time that we actually ship the product, a lot of things can happen. We're going to definitely want to review the credit of customers whose business is growing. And if they are above their credit limits, but it's because their business is growing, not because they're in arrears on their accounts payable to us, then we would probably increase the credit limit and proceed with the fulfillment process. On the other hand, it's possible that we have material in transit to a customer that we have not yet invoiced. And so once that material is delivered and we now add the invoice to the accounts receivable from that customer, they may then go over their credit limit prior to the shipment of the next product. The point is that this credit check cannot just be a single event in the fulfillment process. It must occur at multiple stages in the fulfillment process. And in fact, in most organizations, it does occur at several stages in the fulfillment process. Now, I want to talk about another transaction that I sort of skipped over earlier, but that has to do with something called goods issued. There are four processes, four sub-processes, I should say, that we're going to see throughout the various supply chain core processes of procurement, production, fulfillment. And these are what's known as the material movements or goods processes. And there are four material movements processes that we're going to be looking at. The first one is something called goods issue. And this process is essentially when we take a physical material out of inventory and, in this case, ship it to a customer. The goods issue process creates a financial impact for the organization. That financial impact is that, as you can see here, it's going to reduce inventory and create a cost of goods sold that's going to go into our revenues ledgers or sub-ledger. And it's automatically going to adjust accounts receivable. So as inventory increases, accounts receivable, as inventory decreases as a result of the goods issue. As inventory decreases, the accounts receivable will increase. Now, the other material movements processes, there's a mirror image one called goods receipt, we'll get to that when we talk about the material management process. There is a goods transfer process that might be used if we are, say, moving material from one physical location to another, say from a production plant in one city to a distribution center in another city. And then we also have something called a transfer posting, and we'll talk about transfer posting later when we talk about quality assurance and how that is implemented. The final part, of course, of the fulfillment process is the payment step, when we receive the accounts receivable from the customer. This is where we're going to say the fulfillment process ends, is with the payment. And again, this creates an accounting entry. We decrease accounts receivable and increase our bank account. Now, a key part of every single process is something called document flow. And document flow allows you to follow the process step by step through the system. So for example, here you can see that we originally received an inquiry. The inquiry resulted in a quotation. The quotation, the customer accepted, which created a standard sales order for us. And then the fulfillment process kicked in, created an outbound delivery where we picked, packed, and shipped the product, created an invoice, and the customer finally has paid the invoice and cleared the process. So I can follow the process step by step, and each one of these numbers that you see here represent a document that has been created by the system. Now, when we talk about documents and document flow, these are virtual documents. These are not paper trails that we have to follow, but these are electronic documents that the system creates. And by looking up the electronic document number, I can see when it was created, who created it, what they did, how it's changed over time. In other words, I have essentially an audit trail for each process. So when you think of document flow, you should think in terms of audit trails. And the document flow is a very important feature that allows us to follow the process from start to finish. So this concludes what we're going to call the Global Bike Fulfillment, or in the case of this particular section of it, the order to cash process.